Well, for an expert view on the oil markets and where they might go from here, I'm joined by Homayoun Falakshahi, Senior Commodity Analyst at Kpler. Homayoun, many thanks for joining us today on a day of tumultuous events in the Middle East and where the focus is slowly shifting towards the two big power brokers in the region, namely Iran and Saudi Arabia. How do you think all this is going to shift the power balance between those two big players, and what impact might that have on oil markets?
And thanks for having me. So far, I don't think this is a big change in terms of Saudi-Iran relationship. We know that the two countries have got a bit closer over the past few months. And if you look at the reaction from, the Ministry of Foreign Affairs from Saudi Arabia, from Kuwait, they've been relatively supporting Palestinians. They haven't been as neutral as I guess Israel and the West would have expected. So I would say that so far it is not a major choke point between Iran and Saudi relations. For sure, though, this really pushed down the prospect of the normalization of relationship between Saudi Arabia and Israel. So on that front, it seems that Hamas has won, at least has reached one of its targets.
So in that sense, Iran could be said to be rather successful if it is indeed behind this action by Hamas. How is this going to impact on relations between Iran and the US, where we have seen a little bit of a rapprochement over recent months?
Again, I think so. The first thing is that the impact on physical supply and demand in the market is going to be extremely limited. I mean, at least unless the situation escalates. Now, this is the key point. It seems that no one, either Iran nor the US, wants an escalation so far. And this is why we've seen the US being extremely cautious in calling out Iran as being behind this attack, directly or indirectly so far. So for sure, this in the very short term, it pushes down again, pushes back away any prospects of direct negotiations between US and Iran and potential new deal between the two countries. But the last thing that the US wants entering a presidential election, and I mean by the US, I mean the White House, is high gasoline prices. So this is going to be a top priority policy for the White House. And this is why we don't think that yet so far the US is going to take a very hawkish stance against Iran unless there's clear evidence that it has been fully behind this.
And tell us, Homayoun, what you think the thinking is at OPEC, which of course has been following a program of production cuts, although actually output has been rising according to the latest figures.
It's pretty much the same thing here. The impact is extremely limited, at least until now. What could happen in the next few days and weeks is if an escalation happens and we see, for example, the Suez Canal being hit or oil installations in Iran being hit directly by Israel, that would be something completely new, and that would change for sure OPEC plus policy, and we could see the possibility of seeing more supply from countries such as Saudi Arabia. But so far, because the impact on the oil market is limited, despite the fact that the market is pricing in some geopolitical risk premium, there is absolutely no change in OPEC plus policy.
So Homayoun, I'm guessing from what you're saying that you see only limited bullishness from here as things stand at the moment.
Absolutely, and this reflects what the market started to price in last week, with the big crash in oil prices. And this is due to the fact that we're entering a weak seasonality for the oil market with as much as 3 million barrels per day of refinery capacity turning offline, mostly in the Northern Hemisphere in the weeks ahead. And at the same time, higher exports from OPEC+. So despite stable production from Saudi Arabia, we have seen exports from the kingdom increased by about 600,000 barrels per day last month, mostly due to, again, refinery maintenance and lower crude burn. So if you combine the strong US dollar into that may impact demand globally, then the outlook, we think, is not so positive, not so bullish for prices, again, unless the situation escalates. But basically, we see prices as getting closer to $80 than closer to $100 by the end of the year.
Okay, Homayoun, we'll leave it there. Homayoun Falakshahi, Senior Commodity Analyst at Kpler, many thanks for your thoughts today.